What is going on YouTube? It's Sankey and I make videos on the stock market. Now before I get cracking, if you don't already have a trading 212 account, you can check out my link down below, sign up, open up your account and you get a free share of stock. You can join us on these fire plays and kickstart your investment journey. So a good buying opportunity is starting to present itself in the market. I want to share it with you guys. Now you know I always come here each and every day to share with you guys high growth plays and quality assets to add to your portfolios. But before I do that, I want to touch on Churchill Capital, that's CCIV, to ensure that you guys have the strategy nailed down on this play. So here we have it, a CCIV, that's Churchill Capital, currently standing at $18. Now myself and everyone at the Patreon, we all made sure that we jumped into this play on the day that there was the rumoured merger with Lucid Motors. So as you can see, standing at 100 shares, return almost 40%, average entry just under $13 on this one. So we still haven't received any news or update as to whether that merger is actually going to take place. So this still does remain a speculative and risky play within your portfolios. But what I've noticed looking at that share price is it's starting to move sideways. We're not seeing harsh upwards or downwards movements in that stock price. And that's a good sign because often in our plays, when there's no news, that share price will tend to come downwards as the investors lose hope and confidence in that business. But with this one, there's still the investor conviction and backing in CCIV. So that tells me that when we do hear news, or if we do hear news, that stock price is probably going to pop upwards as you're going to get a rush of investors come in and buy this stock. Now, if the merger doesn't take place, it's likely that stock price is going to come sharply back down to around the $10 mark. But I want to make sure that you guys come out the other side profitable on this one. And to do that, you have to set your stop limits. You guys know I'm big on setting your stop limits because it's going to allow you to maximize your chances of walking away from a play profitable. So I'm going to show you guys how you do that. You hit sell, then stop limit. For the stop price, we're going to select $16. Then head down to the limit price. I'm going to set $15. Expiration, good till cancelled, review order, send sell order. Just like that, guys. Up on screen we have Tattoo Chef. Now this one's been trending very nicely down to my buy zone. That's why I want to share it with you guys. If you don't know Tattoo Chef, they source ingredients from the farms and turn these into ready-made frozen foods. Their products are vegan, vegetarian and often gluten-free. Now right off the bat, this is a very interesting one because we know more and more of the population are moving towards plant-based diets due to environmental reasons as well as health reasons. Now I told you guys we want to position ourselves in all the biggest trends to ensure that we can maximize the returns on our portfolios, and this is just another trend. Now this company has massive plans. They're looking to do 1 billion in revenue by 2026. This is an enormous growth that the company is forecasting, considering last year they did about 110 million in revenue, and they're looking to get there in a couple of ways. So this company is very focused on bringing out new products. Just last month they moved into meat alternatives. Now they're also looking to bring out non-refrigerated items as well, like snacks and bars. Now this is good news because it's going to increase their total addressable market and allow them to generate more revenue, and as a result that stock price should go up. They're also looking at international expansion and they're particularly focused on Europe. Now they already have a base in Italy, so they're going to use this to transition into the rest of the European countries. Now if they're able to pull off these numbers, you are going to see some good growth in that stock price. That's why I want to make sure this play is on your radar so you can load up on them. Like I said, they are trending down towards my buy zone, which is $23. So if you can catch them under $23, do consider loading up on this play. Like I said, they're trending down, so you should be able to catch them. Alright guys, so it's our community play session where I give you guys my 2 cents on the most popular ticker that you guys leave down in my comment section. So you guys wanted an update on cloud commerce. So those who don't know, cloud commerce is a digital advertising business that I put the channel on as well as the Patreon. A lot of us jumped into this play and made some good returns. This then shot up the next day 200%, and I think the very next day another 100%. So it's a high flying performer. Now a lot of us took profits on this play, banked in 100, 150, 200, 300% return. I jumped out at 200% return the very next day on this play, took out 90%, left in 10%. Now the latest we have from the business is that they've launched their new swarm solution using artificial intelligence, which is said to cut advertisers' costs down by 50%. Now we don't know how effective that is or how many advertisers, how many businesses have actually taken this on. So we don't know how much business they've actually received from this. That's why that stock price hasn't been sustained. That's why you see that stock price coming back down, trending back down. You got to remember, this is a business that is said to do around 14 million in revenue. So there's only so high that that stock price can go. Right now that market cap is around 60 million. So this gives them a market cap to sales ratio of just over 4 times. You guys know I always say, look at the market cap to sales. This is going to tell you how expensive or cheap that stock is. but now they're looking reasonably valued at around 4 times. Now, I do still think cloud commerce has the potential to have a good future and see that stock price go up higher, which is why I've left in 10% into this business. Now, they've been trending down towards my new buy zone at 7 cents. So if you can catch them under 7 cents, do consider loading up on this one, because if we do see an announcement about how businesses are taking on that sort of solution, how it's reducing their costs, how they're winning a lot more business, how they've projected even higher forecast revenue numbers for this year, then you are going to see that stock price shoot back up again. Now, entry point remains key on this one because this is a penny stock and can be volatile. That's why I've set my strike price at 7 cents, no higher than that. Alright guys, if you've been rocking with the channel, you know what time of the day it is now. This question comes from Alan. Now this is a long one, so I'm going to summarize it for you guys. Basically, he's a student with about 10,000 invested into the market. Now he says he hears about new stocks every day. You guys know I come on here to deliver you bangers, high growth, high quality stocks. But he doesn't know what to do because he doesn't have any additional money to invest into these plays. So he's wondering, should he take money out of his current plays in the market, take those profits and invest into some new plays? So anyone who's got the same question as Alan, I'm going to show you guys 3 strategies to solve this issue. So one option for you to consider if this works for you is to get into swing trading. That is, you might take profits from one play, invest into another, take those profits, invest into another and repeat that process. That is high frequency investing. Now we've got a lot of people over the Patreon who do that every day and they make some good returns and everyone helps each other. They all suggest plays, entry points, buy zones, they have their alerts. So it's a very good community over there. If you want to get into swing trading, those guys will help you out. So the second strategy is more of a buy and hold one, but first we need to get rid of any dead weights in your portfolio. This is going to free up some cash. What do we mean by dead weights? This is plays that just are not growing, and you can use that cash to then invest in some more high growth plays that I give you guys on this channel. So by doing that, you'd be surprised. You might free up a couple of thousand that you can have on the side to invest into the plays that I give you. You can invest a couple of hundred into each play. And also you can catch those dips, maximize your returns. You can do it this way. And the first strategy I have for you is a combination of both. So with the high frequency, you can use that for your penny stock investing, and then for more the longer term holds, for the high growth wealth builders that I give you on this channel. So as always, thanks for tuning in today. Do hit the like button for me, it really helps the channel out. If you're new, hit that subscribe button, join the family, and as I always say, check into the channel each and every day. Stock market is rapidly moving, you never want to miss a beat. And I'll catch you guys in the next one.